Tuesday, welcome back. Final hour session just after 3 p.m. on Tuesday the 9th. Market is once again pretty much right where they started for the open. We open up around 65.03 on SPX. We're trading at 65.05. Range on the day is low as 64.83. We just poked a 65.10. So about 27 points from bottom to top. Plus or minus on the day was about 20 points, and we're literally like 4 points off. So market makers having 2 days of really consistent price action. No outliers, pretty calm. Most of the major headline news is coming on Wednesday, Thursday with PPI and CPI data. That's what I just posted on Telegram. So, everyone could be painting this like doom and gloom picture, but global PMIs are heading higher. That's likely going to lead stocks. US inflation forecasts are going higher. That's still, the best way to fight inflation is to own assets. So if you have stocks or stock exposure, if you're participating, yes, the market might come with volatility, but between stocks, gold, silver, Bitcoin, pullbacks, corrections, retracements, we all know this should happen, but it's not a bad mix to have if things are ultimately going to be going higher. We have the news tomorrow at 8:30 for PPI, and we have the news Thursday morning on CPI. I want to take a look and see where things are at for the market maker expectations for the day. So if we go to tomorrow's news, as we're closing up here in the next 45 minutes, we got a plus or minus 24 on the day for Wednesday. On Thursday, we got a plus or minus 45. So clearly market makers right now aren't putting a big emphasis on PPI, but rather putting a big emphasis on CPI. I would like to see if we're trading at 6,500, if I did a 6,500 by 6,505 and maybe a 20 wide here. 560 is not a bad trade for a daily profit play out to the 11th. I think we would have prices above or below. I'm hoping that we're not at 65 by the end of the day. We're either up to highs, which would be around 65.30, I believe. That was a recent high we had here, 65.33 recent highs. Or we are back down breaking these lows at 64.83. So if I, let's see, I wonder if I can go, how much could I get for this? I get $90 risk 410. 64.80. Maybe I look to see if we can break. So that's 615. $6. 5.7. This isn't too bad. So I know this is a bigger dead zone. This is a 35-point dead zone. Can we be below 64.80 by the close on Thursday? Can we be above 65.15 by the close on Thursday? Could I get $6 on this trade? Let me see if I can get 6. That's a pretty wide dead zone. But I don't mind the trade. It's pretty defined risk. And let me check the numbers here. 65.15 would put me at 65.15 and 64.90. Is that right? So 15 and 80. Oh, that's a little bit wider. So 64.15 and 80. So that would be my dead zone. It would be pretty annoying to see price here for Wednesday and Thursday and not making a move one way or the other. Let me confirm, maybe the 15 by 80 for Friday. Let's move this expiration out to Friday. So the 12th. Now I'm 35 wide. Maybe I'll move this 85. That's 30 wide. I don't like this. I don't love it. I don't mind getting $6 on the trade. I don't mind $6, but I think that's a pretty wide dead zone to have. Market could be exactly into this like indecision zone, and all eyes heading into the Fed next week, and maybe PPI is just CPI PPI is just a big noisy week. So I'll hold off on that for right now. If it was like 610, 615, 620, I'd be a little bit more willing to take the trade. But only getting $70, having to wait a couple of days, seeing a dead zone, I don't really love that. So let's chat. Israel bombing, tensions rising. Price action did nothing of the sort. So I don't think the market's concerned with the geopolitical risk right now. Gold we'll take a look at. Thanks, William. I appreciate that. Maybe chop around till CPI. Right now I'm showing that market makers are caring more about CPI on Thursday than they are on tomorrow. So if we go to the 10th, which is tomorrow's expiration, plus or minus 24 on the day. We go out to the 11th. That's clearly where the market makers are trying to put in most of the price action. Okay, we go out to Friday. That like lets the dust settle on Tuesday, Wednesday, or Wednesday, Thursday, Friday. Plus or minus 50 based on today's price action. So, could I do something like this might be a little pricey on the SPX, but maybe a SPY trade? How wide is the SPY going out to Friday? SPY's at $5 on Friday. Could I do? I mean, do we get $5 a movement by Friday? I would hope we can. If I buy the 650, so we're trading at 649.80. If I buy the 650, buy the 649, can I go $5 out and go $5 out? I pay 330 to make 5. Maybe skip by $1, make it a little bit cheaper. I pay $3 to make 5. That's okay. I pay 330 to make 6. That's a little bit better. And I pay 350 to make 7. So 360. I mean, this is fair if we have kind of an explosive move, plus or minus. I think I'm going to take this trade. This is I'm going to issue this trade for double up. So I'm going to do a 651 by 658. So I'm 7 wide. I think we can go. Let's go 658. Let's see the SPY here for a second. So we had highs at 52. Gosh, it's like the upside. I mean, are we really going to break highs? I mean, if we hit a $3 high and then we drop, I kind of hate that trade saying this is my middle. I could just see the prices doing something like this. We go up to hit the highs and then we fall back down and it stays within that range and I don't get paid. It's like that's my biggest concern is approaching this from, calling today the center at 650. If we hit all time highs, it's only $2.20 higher. I need price to go at least $3.50. So we'd have to breach all time highs by a pretty decent amount. If we go to the downside, I get paid a lot more on the downside than I do the upside. So maybe capping this upside, getting a little bit more premium here. Oops. So $7 on the downside, maybe 4 to 5 on the upside. So I could make 4, get paid. I don't know. I think the better trade is we got to give it a chance. 7 wide and 7 wide. I pay 359, 360. That's just under a 1-to-1. The trade on this one realistically would be if I took this trade, I need price to give me maybe $1 or $1.50 a profit. If I get $1 out of 360, I mean that's a 27% winner. If we get a big move, one way or the other, if the market wants to make a move either to hitting all-time highs, going a little bit higher, that would cover me. That'd be about a break even at all-time highs. If we drop to the lows, that's 260. We'd have to break these lows and start coming after, Friday's non-farm payroll low. Now we're talking profit. Now that's a $6 move. So, gosh, I literally had the same debacle during my daily profit plan session because I looked at this one for this week and I just thought, is CPI PPI going to be the big combo that moves the market, or is it going to be FOMC next week and post FOMC? And I don't know. I mean, this isn't bad for a price trade. Maybe it's almost better to do a calendar spread. Maybe. Let me see what this would cost me. If we get to highs 652. So if I did a sell 652 for Friday and I buy a 652 for Monday, okay, so that cost me 43 cents. Let me see what this looks like. So if I sell the 652 and I buy the 652 and then I go down to, let's see, expect to move $3-4. That's not bad. And then the downside, if we drop to non-farm, that'd be pretty cheap for like the 645 zone. Let me build this one out first in option strat. I'm going to go here on SPY. if I build out the 12th, so on the call side, if I buy the call out to the 15th, that'd be the 652. And then I sell a call at 650, and the expiration on this one would be 12th. So there's my calendar spread. And if I add in on the buy put, actually that'd be the expiration on the 15th. So I'd sell the 45 and buy the 45 to the 15th. So sell the 45 and then buy the 45. Expiration, this one would be the 15th. There. What's this trade look like? SPY at 650. Is that right? We're only going up a couple bucks. I guess so. So like 52 to 53. I mean, is that a good trade? I mean, I pay 30 bucks for it. I can, make a lot of money through the peaks here, but we'd have to be like perfectly pinned around this 650. This would be, it's interesting that around the 652 handle, I'm actually losing money. It's more profitable to the downside. It's just because I'm way closer on the call side than on the put side. Maybe I move this up to, I buy the 653 and 3. That's a little bit better. So cost me about 75 to 80 bucks. I can probably make that in profit if there's a little vol expansion. We're expecting a plus minus of $5. I think we can get there. So that's not a bad trade. If we have excessive volatility, we do take on some risk, but my goal would be to manage this thing. Let's say that we, by Friday or by Thursday with CPI numbers, let's say in the morning, we have a big move up. If we're sitting right around current price, 649, 650, this trade offers almost 100% profit. That's not bad if we're sitting right here. The downside is if we're hitting the highs or the lows that I'm after, I'm getting a little bit of profit on this one, but I've got to be aware that if it breaks and goes lower, I'm going to be taking some heat. So it's almost like I want to manage this thing for maybe Thursday, Friday. This will be interesting. I don't know if I'm going to take this trade. It just seems like a lot's going on here. If I change this to, if I buy the 12th, so I buy the 12th and I sell the 11th, buy the 12th there. So now coming into Thursday morning, we get into opening bell. I've got a little bit of a dead zone here, but if I'm anywhere near my traps, I mean, if this is accurate, it's like I don't lose a lot at current price. If we stay at 650, I don't really lose much. If I get down to equidistant highs and lows, which is about $5 from current price, $4 from current price, it's not a bad trade. I don't really lose a lot here. I could take this trade for just a loss of a couple dollars, but potentially, there's over 100%. There's over 100 plus percent, but that's spot on. So probably not a bad way to trade it. I expect some volatility. I just don't love the expirations. Maybe go up $1 more. That's going to give me more of a dead zone. Pay a little bit less. Pay a little bit less. Okay, so that's plus or minus a little bit bigger dead zone. So we need some volatility. We go up to 54, 55. This would be a Wednesday or Thursday, Friday expiration. I don't know. I'm just grasping at straws here. I'll move on before I obsess over this and force a trade. So I'll hold off for now. I did put some new trades in for my Project Options Edge today. Project Options Edge, new trade on HUM for Humana, new trade on IWM, and I'm also going to put in a new trade here for XOM. Give me 1 second. I'll just drag this in. Well, XOM, which is Chevron Mobile, put a new trade in XOM. Okay. There. So I've got a new trade on Project Options Edge for XOM, for HUM, and for IWM. So there's 3 new trades today for Project Options Edge. That is also in my tracker. HUM, IWM, XOM. Good. Yep. So those are all in. Looking nice. HUM, I put in a trade where it's a ratio spread. I'm collecting $4 of credit. If I were to take assignment, it would be below the COVID low and below this year's low as well. Fair market value on this underlying is like $800. $856 is trading at 281. So I'm hoping that I'm getting this set up in a way that I can generate a pretty safe $400 of income. Price can stay troughed out around this low, around 205 or 210, and my strikes are in the one. What I have here for HUM. HUM got filled at the 190 strike. So 195 by 190 ratio spread for $4. That trades in. So that's a nice one. XOM. I like this one looking for dollar cost averaging levels. So I put in a ratio spread to start. And if we get a deeper pullback, if we're back to 90 or we're back to 80 or we're back to 70, I will use this low, this high. I will gladly take some chunk of XOM and try to take this thing for a nice gain. I think that having energy in the portfolio is wise. I think XOM, CVX are pretty good plays. There's other ones. There's HAL for Halliburton. Okay. Also like pretty cheap. But it's not like all forms of energy. If I go HAL, Halliburton, I mean, trading way below estimated fair value, price to earnings, 10 times earnings, fair value. I mean, this is like 100% upside. Again, it's like, it's ridiculous during the COVID lows at $5, but if this is going to be, I don't know, I just think like energy in general is pretty good exposure. XLE, it's a little tough to say I love the sector, but the sector looks an awful lot like what's weighted into it. So if you go to sector performance on XLE, look at the top weighted stocks. So go to the energy sector, look at your top holding. I mean, XOM is 23% of the weighting. Chevron is 18.55% of the weighting. So guess what you're really trading here? If you trade XLE, you're really just trading XOM and CVX with a little bit of diversification. It's crazy what the jump off is. This is 40+% on 2 stocks and everything else just gets sprinkled in between. But if you want that extra exposure, maybe one of these has a bigger runner. XLE is not a bad play. I just think that across the board, I mean, maybe it doesn't suck to the downside as badly as a sector. But I think that premiums are better at, I mean, this is an $88 in sector. I'd rather just trade XOM. It's not that expensive. I mean, the ratio spread I put on today was like the 100 by 95. It's not that much different than doing XLE. And if this outperforms, plus we have a pretty solid dividend here at 3.5%, 3.6%, it's also a fairly low beta compared to the S&P. So I don't mind that trade. Oil companies all having these massive layoffs, but this could be rock bottom. Yeah, maybe. I mean, I'm looking at this as more like, look, if we're talking about growing, we need the energy to grow. And this is like deregulating, turn these companies loose to drill all they want, get into other alternative energy sources, look at nuclear, look at hydrogen, look at coal, look at natural gas, whatever it takes is to get this energy that's just going to consume all of our demand. If we want to build out the AI future, we need the energy to do it. And that's probably our biggest bottleneck right now. So I mean, I would say that hopefully these companies have the resources, the finances to do it. And if we're also encouraging them and incentivizing them to do it, I think these are pretty well positioned. So it's not an all-in trade. I mean, I'm willing to take some ownership around $90. In fact, if I do take ownership on it, it would be $1.75 break even would be $88.25. So if I own shares, it's going to be down to 88.25, which is around 20% lower than current price. It's around 30% from all-time highs or these recent highs. So that's a 30% discount. I mean, that's a nice way to start it. And then I can dollar cost average in at the levels that I want. Okay. So we'll see how that plays out. I am watching on SPX today to see if I can get something at the 65.15 to 65.20 by the end of the day. I've got a couple pending orders in. I didn't make these official trades for daily profit play. They're likely not going to fill. 65. Let's see. I'm going for a broken butterfly. That's at the 55 pin. That might be gettable. That might be gettable by the 10th is tomorrow. So not, yeah, I think this is fine for tomorrow, but it's on the 11th. The bigger move is going to be on the 11th. You know, that gets us up into the expected range here, but broken wing butterfly is not too bad to the upside. I'm just going to wait. So I've got a couple pending orders. None of them are getting close to getting filled yet. So I'll just sit and chill. $3 on the 6,600 levels. Those are way out of the money for right now. I'll chill on those. So we'll talk more about those in daily profit play. I did want to share this. I talked about this morning. How many of you type a why me or yes if you're in my daily profit play, or type in DPP if you're in my daily profit play? How many of you are in my morning sessions? So weekdays, 9 a.m. Eastern time, daily profit plan. I'm live every single morning. And today was Technical Tuesday. We got a nice trade in. We had a nice winner. So far for the week, we're off to a pretty good start because it was an active Friday, Monday combo from last week to this week. So to start things off, let's see here. Trades that expired on 9/8. We had 1, 2, 3, 4, 5. We're 5 for 5 so far for the week. Trades that closed out yesterday and today were 5 for 5 for the week on daily profit play. So not too bad. All right, Junior's in here. Dow barely reached all-time highs, then pulled back. Yeah, that's fine. I mean, we're probably not getting. We won't get another thrust until the broader market wants to go. I was trying to review the morning session from today on the YouTube Financial Wars. Looks like it did not push there. I thought it should have. Go to youtube.com/financial wars for the morning session. We are live right now. And if I go live, I go to playlists, daily profit plan. Let me see. I'm looking to see what this is on my computer. It shows August. Oh man, somebody hasn't been updating this. Let's go back. Let's go to all videos. They might just be sitting there with live sessions. So check live, check daily profit plan. So what you're looking for is daily profit plan. So this is 1 day ago. This should have been yesterday's session. So maybe it might not have pushed today. I don't know. I don't know why. Sometimes it just depends on how the Zoom room is open. Sometimes you can push through Zoom. Other times you can't. Look, if you want to join me every day, you can also join me through Telegram. So there's a couple ways to join me. I'll post the links right here. My Telegram channel is right here. So subscribers, Telegram. So this is Chris Pulver Telegram. And if you want to join me for that daily session every single morning, I do have another link you can join with, and it's right here. So that'll come into the chat. So daily profit plan, weekdays, 9 a.m. Eastern time. There. So a couple links. So if you'd like to join me, there it is. Telegram channel, it pops up every morning. So when I go live, it'll pop up here, and there's a link to join. Okay, that takes you right to a Zoom room. And then if you're clicking in that daily profit panel link, that's also a way to jump in and join. You can join that on your phone as well. VB, I see your trade there. I don't think there's any way that trade is actually real. Let me check. Somebody just messaged me in Discord. 918. That's why going out a little bit further. Well, 918 expiration is going to be what day? 918 is next Thursday. That's the day after the Fed. Oof. I don't know, man. That's a tough trade. I think it looks good, but you're going right at the expected move on those highs. I mean, I'd like to think the market has kind of a toppy look to it. You're talking 66.20 by 25 by 40. So I just got this message and I'm not seeing $2. So I'm trading for $1, not $2. I do like the trade, but not for $1. I mean, I guess it's not that bad to be honest. Okay, 50. So you went a little bit wider. Yeah, that makes sense. So now you're risking 1,800 to make $200. That's a little high. I'd rather take this one and try to get those filled for maybe $1.50 to $2 and cut that risk down a little bit. So I mean, it is a good delta. This is planning on a pretty big move through CPI, PPI, and the Fed. Thursday, I mean, the day after the Fed, I almost would rather go out an extra day. What's stopping us from going from the 19th end of the week? That's the monthly expiration. That's a key one. I'd rather kind of test the same legs. So maybe going into like the 15 delta, buy the 20, sell the 30, something like that. So 25, 30 by 40, going out to the 19th. I don't know why this is offering garbage. That one's okay. If I'm willing to risk, that's not a bad trade. This is through the Fed. My biggest concern about the Fed is that the market gets so excited about the stupid rate cut that it's going to be like not the week of the Fed, but after, you know? So I almost think like the better trade, and I don't know. There's so much uncertainty about what happens like this week with inflation and next week with the Fed. You know, I don't want you to ignore the fact that this market might just melt up even further. I mean, if this market's going to correct, it might be one of those stubborn moves where we're like sitting here planning for correction, and what ends up being the catalyst, maybe it's after the Fed, right? And what does this market do? It just keeps going up and down and up and down and up and down. It just keeps going higher, higher, higher. And then when it breaks, it finally starts to turn over. So it's the timing of that you need more than anything else, you know? So if I could do like a 6650 or a 6700, I'm all about like, okay, sure, I'll call the top at least in the near term. So I don't know. Let me just weigh this out for a second. This one's not a terrible trade. If I went to, I mean, I'll just look at the deltas. I mean, a 15 delta, I start there, go 66.30. So a little bit wider. I'm risking, 875. If this one gets filled for maybe maybe $2. Not. I mean, this isn't a bad trade right now. I don't mind this trade at all. I'd like it a little bit better, like a 10 delta, if I'm honest. So let me see if I can move this down. So this one for $1 isn't too shabby. Let me see if I can get filled here for $1. That's a 66.40 pin price. That's a 12 delta with a little bit of breathing room. Let me see if I can get $1 on this trade. I'll take this one out to the 19th. So $1. I'll let that one marinate for daily profit play. Okay, I'm gonna let that sit for $1. I'll put this in Telegram for daily profit play. Okay, currently in live session for final hour, setting up a pending SPX 919 trade with a broken wing butterfly. So SPX 919 expiration, buy the 6635, sell the 6640, and buy the 6655. $1 credit, pending not filled. Okay. So I mean, it's trading at 95 cents to a dollar, dollar five. I'll see if the broker can fill me there. That's not a bad trade to stack it up, and I'll just kind of keep that one out there. I might increase the trade size, I might increase the contract size, but get a better credit if price is going higher. I don't think that price is going to be able to tackle a sustained close above 6,600. I think that 65 is a pretty substantial resistance level for this month. It wouldn't surprise me if, with terrible jobs numbers, higher inflation, and a Fed that is cutting, but I don't know why the market would just rip higher. Anything can happen, right? Anything can happen. I keep going back to the technicals. I think this market needs to at least flush down to the 50-day. At least find the 50-day. At least find some just pullback, man. Just a little pullback will be fine. So let me see. That's not a bad setup for a dollar. If I'm willing to go out to the end of the month, go out to the final expiration is the 30th, which is on what day? The 30th is a Tuesday. And maybe by October 3rd, which is going to be a non-farm, maybe similar trades, just similar mechanics. Now it can go, I mean, this is crazy. I can go all the way up to, almost 6,700 for the same trade. Now the butterfly is getting a little bit wider. If I went 80 by 90 here, that's not bad. It's about the same trade. See if I can get $1.15 on this one. So I'm going to go. So just into the end of the month, see if I can get $1.20 on this one. $1.20, not filling. $1.15. Hang on, I'm going to cancel this one. I'm just going to go to one contract. Preserve a little bit of buying power here. So that was a 90 and then 20 wide. So for $1, try $1.15 here. $1.15, still not taking. $1.10's okay. Hopefully it fills. Come on, man. All right, I'm going to leave these marinating. $1 for the September 19th and $1.10 for the October 3rd. I'll keep an eye on both of these because I don't mind if this offered like $2, $3, $4 credit. I'll take another trade, take a stab at it. That would also increase my butterfly trap towards the end of those levels. Those are all, coming into a monthly expiration, get into the first part of October. I mean, there's like an 85% chance of profit on that trade just based on the deltas. And that's taken on a lot of volatility. If the market pulls back, do we have a decent pullback of 3, 4, 5%? Do we have a pullback of 5, 7, 8%? If that is the case and I'm filled on any of these trades, then those are easy winners. It's just how much more melt up are we going to see? I think that's the dumb thing is like how much higher of a melt up are we going to see? Right? I mean, I do have a waterfall trade that runs out to 66.40. That's a September 30th. So that's the end of the month. I'm hoping that we are not above. I mean, my gosh, if we're above 66.40, like what the hell's going on? So we'll see. Right. So I'll put these in Telegram for daily profit play, pending not filled, and then SPX 9:30 expiration. That trade is right here, 66.90. Sell 6,700 and buy the 67.20. Similar risk. I'm looking at $1.10 credit. Pending not filled. These are okay. So a couple pending orders. If these officially get filled, then I'll put them in the tracker. If they just sit there and they don't get filled, then they're not official trades. I'm going to put them in. They're in my broker platform. If you take these trades alongside me, once they get filled and they're active and they're live trades, then I'll put them in the tracker and they'll be a real trade. Okay. All right. For my daily profit play students, I talked about this this morning. This has been a 2-day project. I got filled at $1.10. So one of these did just get filled. So this trade is official. filled, right? So I'm going to put this one in. Today's the 9th. We're trading around 65.09. SPX, I'm going out to the 30th. Buying the 66.90 call. Selling the 6700 call. Buying the 6720 call. That is for $1.10 credit. So that one's going to sit for a couple of weeks. Obviously, if it's $1.10 that goes down to 20 cents debit, 10 cents debit, 15 cents debit, I'll probably just take the winner. But that trade is in. Okay. This is a 2-day project that I did finish up today. In my daily profit play, we'll review this again tomorrow morning. But basically, what I looked at was 3 years. Hey, getting filled on both. All right, that didn't take much. All right, see, these are both filled. Okay, these have both been filled, and I'm going to track these in the tracker officially. So trade 462. Today's the 9th. We're trading at 65.09. SPX 919 expiration. 6635 call. 6640 call and 6655 call for $1 credit. So that's another $2.10. Hopefully we can pull a majority of that, if not all of it. There's also a profit trap in there if we're coming to expiration. I'd like to think that price is going to be less than 6,500 by the end of this month. Or obviously if the Fed smashes things down a little bit, maybe lowers expectations. My concern is that the Fed blows the freaking roof off, man. You know, they come out swinging. They're like, look, we understand the labor market's in trouble, blah, blah. I mean, you know, they're not going to say anything super explicit, but I think after this market pulls back, it's buy the dip. And I don't know how ugly it is. I don't know if the market's going to melt up higher and then, you know, pivot. I do find it difficult to think that September is going to be another strong month. That does concern me, that we would just have another month that would be more gains. This market has not stopped going up since literally the bottom in April. It pushed all the way back up to just close at negative 1%. It was negative 1.15 in April. And then May, June, July, August, and September so far are freaking green. So I just think in the cycle, it's like 1, 2, 3, 4, 5, 6. I don't know if the market can go up that high. We have crazy high bar counts. We're already extended, overbought conditions with divergence. I think a correction needs to happen. I keep saying it. And again, all I'm doing is I'm just taking little stabs with, I think, a fair probability. You know, there's risk in the trade. I'm going to let the market prove that it can just keep grinding higher, but otherwise a little flush, a little correction, a little dip. Okay. I'm happy to buy the dip. I'm excited to buy the dip, but I guess we got to get it first, you know? So anyway, all right, back to my thoughts here. So those are both filled. That was fun. So what I did here, this is 3 years of 0 DTE, and I've tracked every one of my trades for daily profit play. Okay. So what I wanted to show, I had this discussion with members this week and my full, you know, daily profit plan session, which everyone can jump in and join for free. This is my morning session for my alerts that go out for daily profit play. Just the standard trade, which is one contract, generated $17,000 in the last 3 years of 0 DT. If you are willing as a losing trade to take a second contract on the next day. So if you lose one day, you jump into a second contract the next day, you made $19,848. Okay. If you did that also, if you took a loser and then you took a next trade as a second contract, and then you took if you had 2 losses in a row, the third day would be a third contract. So I'll label these here. This is right here. So this is all one contract. This one is a maximum of 2 contracts. This one is a lot step or a contract step, and this is a full martingale. So I'll label these. So this is all one contract for that point. So which also means way less risk. This one is 1 contract and 2 max on a loss. So example is, you know, lose, win. So this would be lose at 1. So lose at 1 contract, lose at 2 contracts, win at 2 contracts. You keep it the same. Okay, so this one would be loss at 1, loss at 1, win at 1. So they all stay one contract. Let me know if you're following along here. Okay, this one will go a little bit longer in the go here and here. There, I just want to label these a little bit cleaner. This one is one contract, 2 on second, or I should say 2 on next trade, and 3 on next trade if 2 is loser, right? So it'd be loss 1, loss at 2, win at 3. That makes sense? And then this one over here is 1 contract, 2 on next, 4 on next, 8 on next, if those were losses. So if this was loss at 1, loss at 2, win at 4. And then you reset for a 1 contract trade. So basically this one in column N is a full martingale. What I think is interesting is the amount of exponential risk you're taking by going quadruple risk, like 1 to 2 to 4 to 8, but you're only making $21,000 on this trade. You're only making $21,000 on the trade instead of, okay, yeah, I get it. I make $17,000 here just trading all 1 contracts. I make almost $20,000 by going 1 contract, and if I lose, I go to 2 until I win, and then I go 1 again. This one, I'm willing to step up. So I lose 1, I go to 2. If I lose that, I go to 3. If I lose that, I go to 4. I just keep stepping up. I made $20,400. If I was going to go martingale style, $20,900, which is around $21,000. So why isn't the reward a big jump because you're willing to take on these extra risks? Does anybody know? I talked about this in Daily Profitly. By the way, I'm looking at this trade. I'm going to come back to that in a second. Let me take a screenshot of this. The reason why it's not substantially more profit is because we only lose like 2 trades in a row. In fact, over 820 trades in this 3 years, the worst loss streak that we had was 2 losses in a row. That's crazy. So if anything, I can prove like if you just keep trading, you're going to be okay. Okay. Yes. Yeah. So that'd be like the column O that I don't have here. So if you max these risks out, then your max risk is going to be less than $1,000. Okay. I'm going to delete this for a second. I want to see if I've got a trade. It's got to be close to getting filled for today, September 9th. I've got a 15 by 25. It's only trading for 70. It's right there. It's like it's almost up $1. I'm not going to step in front of this little bullet train. If this thing's going to be one of those late day squeezes, we got 5 minutes left. There's little to no room for error, so I'm just going to take. It's got to give me a better credit, like 65.15 by 25. Look at this piece of garbage. This thing might fill. I mean, do not. I don't know. This is probably a stupid trade, to be honest. I'm just gonna cancel this piece of shit. If I get squeezed out for a dollar loss, I'm just gonna cancel it. I like the idea, but there's no wiggle room for error. I'm just gonna cancel it. It's not worth it. Okay, same thing here. For 20 by 30, offering $1, like that's a little bit higher. I'll watch this one. Maybe I can get a little bit more love here. This is going to be really close. It's offering 85 cents, 90 cents. We're trading up to 65.17. I get a little bit of a head start. Just a little late day squeeze. I'm just going to cancel it. Don't be stupid. Canceling. All right. So that broken wing's fine for tomorrow. Just going to get some buying power back. I've got the other butterflies filled. Pending. The 15th is Monday. I'm going to cancel that trade as well. 66 by Monday. That one's probably okay. I'll keep an eye on this one. 10 and 20. I'll keep an eye on that one. All right. These are okay. Those are just bear call spreads for Monday of next week. Oh man, that 15 would have been kind of nice in hindsight. So this trade was up to like $3 and change. Right now it's showing nearly full profit, but that's like literally final minutes. So the trade was offering like $3.50. If you got filled on that trade, you're still risking. I mean, it was a 650 risk to make 350 on the credit. So I'm still taking on risk, but as long as price stays below 65.18, which we still have a couple minutes left here, like you got to be super fast to the trigger button to get that trade entered and closed. And it's also at this late hour of the day when you're in the final like 5 minutes, sometimes you're not going to get the fill that you want either. So it's all good. I'd rather not force a trade and get burned on it and just come back and approach the market tomorrow from scratch. Okay. Is there a way to do the trade you took with less than risked? Um, so Ozilla, what are you talking about? Are you talking about that broken wing? I mean, I'm risking $990 in that broken wing. So I got filled for $1, but I have a potential win of like $600 if I'm spot on with a trap. But I am willing to risk 990. If you want to go a strike closer, so let's take this trade here. So if I do a similar order to the September 19th, okay, if I move this strike up, now I can get 55 cents instead of $1. So the reason I took on more risk is because I want the dollar credit. If you want less risk, then move the broken wing up a strike. So it's a 35 by 40 by 50. Now you get about 50 to 55 cents and your risk is down to 445. So if you want to change the risk from, 900 bucks down to about 450, then just move the strike up. So you can tighten up that that broken wing butterfly by $5 and reduce that risk. That's about as low risk as I can get a broken wing though on SPX. So I wanted the dollar. So I went out extra risk. If you want less risk, less credit, I mean that's not a bad trade, right? That'd be like making if it was offering 50 cents, similar trade, just less risk. Still offers a profit trap though. Okay, good stuff. All right, we got 1 minute left. That 65.15, that would have been a fun winner at the end of the day. I didn't take the trade though. I just thought if this thing screams up, and why didn't I take the trade? Because we're sitting here, making a run. I saw the 50% ATR. I looked at my VIX levels today. We talked about this morning. This is, let me save that. I looked at my VIX levels this morning. 55 potential top, previous highs at 65.30. And this is all happening in real time. So, I mean, this thing was just lighting up, pinning around, 10 to 15. So it ended up cash settling here around 65.15. Let's see what the broker says at the end of the day. If I was quick to the trigger, that would have been a full $3 and some cents winner, which would have been nice. But where's this thing settling? 65.12. Yeah. So yeah, I had a moment of brilliance there if I would have gotten in. But I didn't because the last thing I wanted was this thing to rip up to like 65.20 and all of a sudden I'm taking on a full risk. So I did the smart thing, just didn't overtrade, and I didn't try to press my luck at the end of the day. But nice little pop up here towards 18. That 15, 15 by 20. So this is my 65.15 that was offering over $3 of credit. So that would have been a nice winner. I mean, that could have been $3 of credit that you keep the full $3 at the end of the day. But not every day does the market respond like that to close. The most frustrating trades if you do that at the very very end of the day is that the market does this. It goes right up here and it closes right at the end of the day, and you're like, "Well, I just got filled for $3.50 and I'm losing." And there's nothing you can do about it because you have this trade in and out within 5 minutes, and it cash settles and you're losing. So if the market didn't respond like it did right here at the end, then you're taking on all the risk. So, like I said, better safe than sorry. We're 5 for 5. I'm happy with that. Some fresh trades in today. It's been overall a pretty active day. Got 37 trades in and posted. So far, so good. Okay, nice. All right, let's check some other stuff here. Dollar index. Dollar index caught a little bit of a bid. Oil catching a little bit of a bid. Not much though. Oil still. I mean, oil could still spike down and drive us to $60 to $55. But I think oil is so hated that I don't. Part of me thinks the demand is so high that oil prices are going to go higher. I just think there's so much short exposure to oil that the contrarian trade is to be long. So I do have a trade in for CL futures, so light crude light futures. I have a similar trade if you're in my waterfall income. We do this with strategy two. I did that on oil. I did that with CL, and as long as oil stays above $50, I'll make about $250. So I mean, it's looking better. You went short the Russell today? Why? I just want to buy dips on Russell. I think the Russell all-time highs. In fact, I put in a ratio spread on Russell today for Project Options Edge. If I were to own the Russell, I got a $1.20 credit. Price would have to come all the way back down to 168. So I'm giving myself plenty of wiggle room on the Russell. Natural gas moving a little bit off these lows. I kind of hate this trade overall. I will do this tomorrow. I'm going to put in a UNG diagonal. I'm going to add my sell call to it again. It just expired last week. Gold, fresh all-time highs at 36.77. Be prepared for gold for some type of pullback. I don't know if it's going to be because of the Fed. I don't really care. I mean, you got to be ready for something like this, though. Gold is likely going to pull back. When it's ready, it's going to pull back all the way down to this 200 moving average. Okay. Now, that doesn't mean that it goes down like I'm drawing it out here. I think that if we have a pullback, you look at this level and price pulls back and finds support and the market still goes higher and it looks like a bull market once again, not a capitulation move. When I see prices start doing this, they tend to start doing that in corrections, right? So if we go straight up in gold and we come down, that's probably an ABCD correction. I want to buy those dips. Okay. I don't have a ton of exposure on GLD. I've got anywhere between 50 to 100 shares for a lot of my accounts, but that's been running for the last 2-3 years. I'm going to keep those open because I can always add more shares and maintain a core position. I don't have a huge allocation to gold. It's probably about 3%, but I have about a 5% stake in silver and about a 5% stake in Bitcoin right now. And I'm, obviously just trading for income on my equities. Gold, here's silver, just hanging out around that 41 handle. Any pullback on silver, I like all the dips. We get dips. I'm looking. If you're in my waterfall class, I like strategy 2 style of trade. It's not going to be something I put in waterfall income, but this is what I'm going to personally be doing. If we get a trade that comes down to these dips, it's a way to play that dip with a defined risk trade and look for higher highs in income. I like to do that on silver futures. SLV, I'll just maintain these levels. I think we're going all the way up towards 44. Bitcoin, a little choppy here at these moving averages. Maybe pull back into like a 105 handle. Maybe it bounces off 100. I still think Bitcoin looks pretty good. If you like the future, if you like AI, if you like market cap, you like seeing money move from bonds into other stuff. We don't know what's going to happen to the bond market when the Fed starts cutting. What happens to bonds? Do bond yields go up? Do bond yields go down? What happens to safe haven trading? I don't know. We're in a really interesting spot with TLT right now because TLT is at 89. I did close out. I'm kind of, it's like bittersweet. I closed out a trade this week on TLT. My net debit was $18.82, and I closed it out for $23.10. So I made 23.10 minus 18.82. I made 428 per contract. I was in about 25 contracts. So about $10,700 on TLT. I did sacrifice some of my profit for another, roughly 90 cents at 25. Another, $2,000 to $3,000 in profit. I sacrificed that. However, this is very weird price action to me to see 1, 2, 3, 4, 5+ days at 5+%. That's a pretty big move in bonds. And if you look at what happened with the 10-year yield, the 10-year yield did drop a decent amount, and now it's starting to catch a bit of a bottom. So I wouldn't be surprised to see some volatility coming in the bond market, volatility coming in the yields market. And so I wanted to dump my TLT for a winner. It was a nice winner. It was fine. I mean, like I said, made about $11,000, and that's cash that I can allocate elsewhere. That's more buying power. So I'm okay with that. I'm still sitting around 50% cash. I did hit some all-time highs today, so I'm at 478 right now. This is not bad. New all-time highs for the year. So I'll take a little screenshot. This is September 9, new year-to-date highs. And I'll just keep an eye on this as the year continues. Hopefully, it's more just options, income, wide margin for error. Nothing really derails, nothing breaks. We don't go into a freaking bear market spiral. And I'll just continue to get my options to melt away, pay me more. And hopefully, I'm creeping up over 500K this year. So that would be overall a pretty good run for my portfolio that started out around, trying to think when I started this year. It might have been just over 3 million for the year. So 3 million for the year. I've had some new clients come in, so it's not like I've put on all the gains to get to 4.6, but trading that I have done, 477 is not too bad, and hopefully I can creep up over 500K. That would make things pretty nice. So what do we have here? Place the DPP bull put 64, 65, 55 for 56 expiring make profit. Good. GRP, when did you put that trade in? Did you put that in this morning? 64, 65, or did you let that trade run all day? I mean, we had lows around 85. So for 50 cents on a 10 wide, that's okay. It's a lot of risk if you're wrong. You're risking 950 to make 50, but glad the market went your way. So, all right, all the real drama news is coming tomorrow. PPI tomorrow morning, CPI on Thursday. Let's keep an eye on things. Let's go to Bloomberg. Okay. Let's look at the news. Wednesday, Thursday, 8:30 in the morning is PPI. So we have year over year, 3.7's previous forecast at 3.5. Headline PPI, previous 3.3, forecast at 3.3. There was a big jump in PPI last month. I'm not sure if we're going to get that big surprise move. The market didn't really do anything with it. I think CPI is probably the bigger headline. And I'm telling you that right now, I don't think it really matters what inflation is giving us. And the reason why is because, third-party measurements are not really showing huge upticks in inflation. If you go to U.S. Trueflation, here's inflation index here I'm going to go. No, I want a U.S. inflation index. Where is it? Indexes. There it is. U.S. index. If we're sub 2, I mean, this means that real-time inflation numbers haven't really changed since roughly June of this year. Is it higher than the lows we had back in March and April? Yes. But is it trending higher? No. So even if the markets this week with the CPI print on Thursday, previous headline was 2.7, forecasted for 2.9. Previous core year over year was 3.1. There's no forecast for Thursday. If we print 2.9 or print 3% or we print 2.8, look, the market might take this any way that it wants. If it prints 2.8, 2.7, the market might get super excited and just push higher because, oh, look at this. The Fed's going to cut rates. Inflation's under control. Let's go to all-time highs. I really think for the market to not like this print, it's going to have to be 3% and everything's going to have to read stagflation, which is not really happening. Stagflation is not really happening. People have jobs. It's that simple. Okay. Life is more expensive, but we have an administration on the fiscal side that is dominating monetary policy. Fiscal policy is dominating monetary policy. It has never been more obvious than what we've seen since 2020. And if monetary policy is just now going to start aligning with fiscal policy, I'm telling you, after some shakeouts, after some corrections, I think this market just picks itself up and goes right back and marches towards highs towards the end of the year and into 2026. So I am looking for dips to buy. I'm not looking for a big bad bear market. I do think that there is some concerns if we were to break below like 5,900, 5,800, 5,700. I do have some concerns about how quickly we get back to these all-time highs. But I think if anything, all it is a dip and then the market goes back. And it just tries, and it looks like it's long in the tooth and maybe it flushes out in Q1, but it's still just going to freaking grind. We'll be fine. Just trade through it. Okay. Look, over the last 3 years of trading, does this data have anything to do with which one's non-farm payroll day, Chris? Which one's FOMC? Which one's CPI and PPI? It doesn't matter. A trade is a trade. If you focus on a system, focus on a strategy, a trade is a trade. This is a strategy that for 820 trades had no more than 2 losing days in a row. Okay. If you trade every day, Monday through Friday, the worst you ever experienced in 3 years was 2 losing days in a row. That's not that bad when you think about it. And the win rate is around 90%. And we've been doing it live for over a year, together with, about 1,000 members. So we're doing well. But I think this is an awesome case study and awesome evidence to show if you are willing just to trade and stick to the mechanics, trade often, trade small, manage risk, manage reward, you're going to be fine. Okay. This doesn't matter if the market drops 10% or the market rips 10%. As long as it doesn't do it in a day, you're going to be fine. And if it does do it in a day, we manage risk. Jackson Hole, we manage risk. We lost. I lost during Jackson Hole. I lost like $800 or $1,100. Okay. And then the next week I traded through, I think like Tuesday, Wednesday, and I got all of it back and finished the next week positive as a net result. So anyway, just a strategy. You just keep trading. So anyway, it feels pretty good. I mean, when you can take something with confidence, trade every single day, and know that you're aligning yourself with some of the biggest forces in the market, some of the biggest players in the game. I did highlight this one. These profits here, $4,600 was like a wide open trade. We obviously never take that much risk. In fact, a lot of these could be maxed out, but I can't tweak the profits the same way. So example, like I can take these trades that we never lose more than about $900. So all of my losses here that are in negative, if they were no more than $900, we can cap our risk. But that's also going to cap our gains too. Our gains might be somewhere between like 30, 40, $50. So I don't have the numbers to cap the gains, but I will say we can definitely cap the risk. So anyway, that's what my daily profit play is all about. So you want to join me? Come join me live every single day, 9 a.m. Eastern time. I'll be live tomorrow morning at 9 a.m. and I look forward to seeing you all tomorrow. If this is something you ever want to trade with me, daily profit play, I send out alerts every morning. Waterfall income. We just finished a 2-day workshop masterclass this week. Great class on strategy 1, strategy 2. We already have a trade in for this week. Newsbreakers, it's on a little break until probably the next 3-4 weeks, and earnings starts to pick back up. Double ups, I'm being really picky because I don't see any outliers yet. We have a lot of volatility coming the next couple of days with PPI, CPI. Pinch point, we'll do watchlist Wednesday tomorrow, so I'll look at the scanner. We've got some insurance, which is our portfolio hedges, and then Project Options Edge got 3 new trades today. If you're ever interested in some quick education, this quick guide is $27, and this full course is $497. Okay, so this is just my favorite option strategies in 15, 20-minute videos. Learn how to trade the market up, down, sideways. Learn how to make some sense of this option stuff. This isn't about confusing traders. Okay. I built these 2 courses for a teenager, my nephews, to teach them some stuff. I built this for my clients that are in their 70s, 80s, and 90s to teach them some stuff. So when I'm making some references in some of the videos that I send out, some of the terminology, some of the key terms, you get a little vocabulary lesson, but also you just understand what price has to do for us to make money. And I keep saying this every single day in my live sessions, but if you can think of a trade to do something in the market, you can express it in options. If you want to be bearish, you can express that in options with defined risk. If you want to be bullish, you can express that with options in the market with options. If you want to be directionally neutral and delta neutral, you can do that in the market with options. So literally up, down, sideways, you can trade these markets for income. So my favorite tool is trading options. Okay. Do I have any single option alerts? Hardly ever. Hardly ever. I think it's the worst possible strategy. You are set up to fail if you're trying to make a living on just buying calls and buying puts. I hate those strategies. And the reason why is it's not that they don't work, but you have to get price to move quickly in your favor and manage the trade before it goes against you. So everyone that thinks like unlimited upside, big, fine. You get some awesome winners. I admit, like, yeah, these awesome triple digit winners that you can get on a long call option are great. But if you sit in a trade that doesn't go anywhere and the market makers have their way with that thing and it stays range bound, you're going to lose every dollar you put into that trade. So honestly, what's funny is it's so simple to buy a call option, buy a put option, but it's actually extremely difficult to manage those trades for profit. Because here's my quick rule of thumb. If you go out 30 days on a call option, you better manage that trade within about 15 days if you want to be better on risk management. If you have a winner, great, manage it fast, But if you go out 30 days and you try to let it go all the way to 30 days, time is your worst enemy and you'll probably lose most of your money. So I don't do a lot of single option trades because I think it's the most basic option strategy that brokers let you have, but I think it's a perfect way to set you up for failure. So this is why I do something very simple like, hey, you like a buy call? How about you pair that with a sell call and define your risk and define your reward? And time has not nearly the same impact. Time actually works where it's like you got a line in the sand. As long as you're above that, you make money. Cap risk, cap reward, but I just think it's a much higher probability trade. I like to win. I hate time working against me. I hate having a good trade that goes the right direction. You don't make any money. That doesn't make any sense, right? How did I buy this call option? Price went my way, but I didn't make any money. That's what happens on call options, you know. So anyway, that's my quick way of saying no. I don't really do a lot of single call options or single put options because I think they're setting you up for failure. And if somebody wants to, object and say I make tons of money, fine, good, keep doing it. I just don't like it. I'm not very good at it. I'm not good at it. So I don't trade that way. All right, I'll let you go. Come back and see me tomorrow. Thanks. Bye.